Let's also listen in to my colleague Reema Tendulkar speaking to Nilesh Shah, founder and CEO of Envision Capital, about what these elections mean for the market.
Clearly, the volatility is essentially a function of the expected outcomes and different scenarios which are getting built up. But once essentially we have the election verdict, my sense is a lot of volatility will settle down and we will be essentially back to normal.
Do you think the FPIs will come back into the market and start buying?
Oh, absolutely. I think they will come back with a bang. Once the uncertainty is behind us and once they see a certainty for the next 5 years, they will come in with a bang.
So let's talk about the various scenarios, right? There are three scenarios which come to my mind in terms of a political outcome. One, the NDA comes back with an aggressive, thumping win. Second, they win. They get a comfortable majority, but it's not aggressive. It's not that 400 plus that the market was hoping for. And third is we have a surprise and the opposition, does really well. In each of these three scenarios, how do you expect the markets to play out?
Well, if it's a thumping majority, an overwhelming majority, I think the market is going to respond back with a bang.
Can we get those? You remember in 2009, after we got that, I think 2 upper circuits?
Yes, absolutely. So I'm not too sure about the upper circuits, but clearly there'll be a massive upward bias instantaneously. So the market will be looking for that immediate gratification. If it's a comfortable majority, I probably think, yes, it will be an upside bias, but it may not be as pronounced versus a thumping majority. But if it's the last outcome, which essentially is where it's completely an uncertain market, uncertain outcome, where the current government essentially doesn't come back to power, I think the markets aren't prepared for that.
Not prepared at all?
Not at all. Because, Reema, what the markets don't like is uncertainty. The markets like stability, markets like continuity, markets like positive change. So if the current government essentially doesn't get re-elected, I don't think the markets are going to take that kindly, at least from an immediate reaction point of view.
Okay. Let's talk about scenario number 2. BJP comes back to power. They have a majority. But again, it's not the thumping win, right? So it doesn't derail the economic progress, the path that we're on, but does it slow it down?
I don't think so, Reema, because the bottom line is that India will continue to grow at about 7%, give or take 25-50 basis points. India will remain the world's fastest growing large economy. I still think it will bode well and augur well for macroeconomic stability. That's what foreign investors, all investors, look forward to. And India as an investment destination will only keep getting better and better with every passing month, every passing year. So I think if we essentially have the second scenario, I still believe that is going to be a hugely positive trend.
And the FPIs come back with a bang in scenario 1 and 2.
Oh, absolutely, because then they know that till 2029, they don't have to worry or bother about that. They can look forward to policy continuity. They can look forward to many policy changes. They can look forward to introduction of newer policies, which makes India even a more attractive investment destination. So I clearly believe that essentially the FPIs essentially are going to come in with a big bang.
Well, Bollywood